G'day everyone, welcome back to another update for the German DAX and the Japanese NIKKEI. Now the chart is showing a resistance being hit for both of them as a bit of a retrace possible. One's already started, so we'll go into that in a minute. We'll include backtesting, which demonstrates how you could have traded using one of two strategies. So don't forget to hit that like and subscribe button to support the channel. In terms of the outlook as of today, June 12, the German DAX, despite a sluggish domestic economy, the DAX benefits from strong international exposure, particularly in tech and industrial sectors. Investor optimism is bolstered by potential political reforms following upcoming elections, aiming to address structural challenges. Forecasts suggest the DAX could reach 25,833 by year end, with current price around 24,043. For the NIKKEI, the index is projected to rise approximately 5% by year end, reaching around 39,600, driven by a weaker yen, low interest rates and robust corporate earnings. Analysts anticipate continued growth with potential to surpass its all-time high by the end of 2025. So for the long-term trends, first on the monthly, you can see it's still strongly above the moving averages, giving us a nice bullish bull run. On the CCI as well, also bullish, so no sign yet of a pullback. Although we have marked on the monthly, let me just zoom in for a moment, we have marked these two areas which are fair value gaps, which means there's unfilled orders potentially in there. Now the prices haven't retraced back to those levels yet. You'll see this one here, for example, that will retrace there initially the month after that, and that wick of that candle came down and filled those orders. Likewise up here we had some other fair value gaps, so they've all been filled with the wick of that candle. So they're all completed. These ones still are remaining, so just be mindful of that. We might see a very long-term downgrade at some point. Again, these are very long-term plays. It's a monthly chart, so it's not going to happen tomorrow, but it could happen in the next even years, so just be aware of that. Here, for example, it took a few years to play out to fill those fair value gaps. On the weekly, we've also had this, the first thing we look at is any divergence. We had a bearish divergence here, and you can see there I've drawn this blue target range of this bearish divergence, lower highs on the CCI versus higher highs on the price. And that is measured with a Fibonacci going from that high. We'll take it back to the significant low, and that would have been that point there. So that's the 38% range of the Fibonacci. So we expect that at some point, if this CCI keeps dropping, you can see there is a big bearish candle at the moment on the weekly chart. Very likely we're going to see a pullback towards that range. This other area I've marked as a red rectangle. That still is actually a fair value gap in those three candles. You can see that one touched it there, but so far this one and that candle, fair value gaps, haven't been filled, and that also coincides with this bearish divergence. So we might see the price pull back down to around this area in a near term. So just be aware of that. It looks like the CCI on the weekly is also about to break into that moving average range, indicating a potential, once it hits that range, it'll be in a neutral positioning, so don't go long yet. We want to see this play out first. Now if we go to the daily chart, on the daily we've hit this resistance up here at 24,355, and again we've got a bearish divergence here, and I've drawn a target range, and that would have been a Fibonacci retrace down to that low, and that's at 23. That should have been there actually, 38% range. That's a minimum target range. That's where we expect it to break. Again, that also coincides with these two red areas, which are also fair value gaps. So that one hasn't been filled yet, neither has that one. These up here have been all filled. And again, that coincides with this pullback. So we might see the price come back to that level there. If I just draw that Fibonacci again, that'll also coincide, if it fills that one, it coincides with a 50 to 61% Fibonacci retrace. So just keep an eye on that. Daily, along at the moment if you're trading on the smaller time frame or the daily. If we go to the intraday chart, this is the 1 hour chart here. On the left it's the daily chart as a reference. So you can see that there's no divergence to look at, but the CCI is dropping off and so is the price. So the CCI is moving in line with the price. We had a bearish divergence here. That broke down, hit our minimum target range, went down to about the 50% level, actually just broke below the 50% level, then it bounced out of there. And in terms of fair value gaps, these ones have all been filled with that action happening there. More recently, these have all been filled as well. One up there hasn't been yet. That came close. That filled that area. But more closely, we've got these. This one here hasn't been filled, so I'll mark that. I don't trade these, but I use them as a potential area to be aware of price volatility. Just make that market there. So that's the fair value gap immediately above where we are at the moment. You'll notice the CCI has broken into that moving average range, but the price is still bearish. Again, we predominantly use our CCI and our direction of the higher time frame to trade in that direction. So looking at the back test, so we're looking predominantly short positions. Again, short positions from that point when the CCI broke below, and the price did as well. And that up here is indicating short positions for the stop loss approach and the average down approach. And you can see there the stop loss approach has generated about $507, and the average down approach, because you multiplied a few contracts there, that has created about $5,000 so far. So for the Japanese Nikkei, you can see here the price has broken into that moving average range, and it's finally broken above that as well on the monthly chart. On the CCI though, it's still dropped below the moving average. They're giving us a bearish momentum. So somewhat mixed or neutral positioning so far. And that was a result of this bearish divergence, lower highs versus higher highs, broke into our initial target range. In fact, it went a lot lower than that with those wicks of those two candles. Also notice on the monthly, we've had these fair value gaps. Now they've been predominantly filled with the wicks of that one to about 25% of that one. So we possibly may see further downside for that one in the coming months or even years. But these ones all have been filled with that action of those wicks of those candles. On the weekly, first off on the trend, the price is broken above the moving average, and so is the CCI, so giving us a bullish momentum. However, note here we had a few fair value gaps here previously in that decline, and they've been all filled. And more recently now I've got this one here was 25% filled. I haven't marked it. I probably should, just to highlight it, because if that gets filled, if this gets filled down here, then we're going to see it the price break through that level there as well. So I've got two fair value gaps that still haven't been properly filled yet. So you might see a bit of a downturn in the coming days or even weeks. On the daily, we've got hit this resistance, as I said. The price is above the moving average, and that's what we look at predominantly for our trading, and so is the CCI. So predominantly long positions to be taken, but however, notice we've got a pullback so far on the daily as well. If I zoom out, you can see there we've had all these fair value gaps in the past, and they've all been filled with the wicks of those candles. And more recently, those ones there were filled with a wick, but eventually the price broke up higher as well. Another fair value gap there broke down below the 50% level before bouncing, and now we've got these. As I said, I've got these two that haven't been filled yet, so just be cautious of those. If we go to the intraday chart, again that's the daily, and this is the 1 hour chart. We've had this bearish divergence versus high highs in the price, and the price has pulled back. Now if we were to draw a Fibonacci retrace from that point, let's see if it's completed. It's already broken through the 23-38% range. So if I mark that in that range there, and it's bouncing just shy of the 50% level. But again, the CCI is still dropping on the 1 hour period, so we might see further downside. Also note, back here we've got these, the latest one, we've got this fair value gap here that hasn't quite been filled yet. This one's been partially filled, that one's been fully filled. These ones have been mostly filled as well, so you might just see a bit of an uptick to fill that fair value gap before declining further possibly. So again, I'd be cautious about going long, even though the daily and the weekly are showing bullish momentum. I'd wait for the hourly to break higher and start moving in line with the price to the bullish side as well, especially breaking through this previous resistance. Now in terms of going long, had you been following it properly and according to the strategy, you would have taken long positions, and that would have been on the daily based on that period back there. So if we look at the 1 hour period, let's just wait for it to complete. So on the 1 hour time frame, you would have taken long entries from about the 6th of June, which happens to be about this period back here. The stop loss approach with those single entries would have generated about $381, and the average down would have generated about 4,700 with a few multiplying effects happening there. Now again, if you had to follow the bearish divergence there, you would have got out of the trade once you start seeing the price break below as a result of that bearish divergence, and you would have taken profits a bit higher there as well. So if you're new to trading, we're now including a video series, Pete's Investing Plus One, as part of the Pete's Investing channel. The Plus One videos are a dumbed down version of our strategies and give you a better insight into our analysis and help you follow our daily videos. If you enjoy the content, subscribe at least on the free trial to my Patreon page, where I publish weekly bullish shares across various regions of the world's markets. Thanks, and talk to you in our next video.